In the largest bank failure in the United States since the 2008 global crisis, fresh details are coming through. The fallout has rattled global markets. Shockingly, just hours before the Silicon Valley Bank collapsed on Friday and authorities seized the assets of the institution, something unusual happened. SVB employees received their annual bonuses. If sources are to be believed, these payments were made for the work done in 2022, and they had been in process days before the collapse. There are also claims that California-based bank has been historically paying employee bonuses on the second Friday of March, and this could perhaps just be a coincidence. While the amount of payout is not out in the open yet, the bonus generally ranges from $12,000 for associates to $140,000 for managing directors, according to Glassdoor.com. In fact, SVB was the highest paying publicly traded bank, this according to Bloomberg in 2018. The startup-focused lender SVB Financial Group was taken over by the Federal Deposit Insurance Corporation around midday on Friday. Now employees of the fallen bank have been offered 45 days of employment at 1.5 times their previous salary by the FDIC. The bank had over 8,000 employees as of December 2022. SVB fallout is being explained through a number of factors: poor financial decision-making, inadequate communication to raise $2.25 billion of capital, that too after a loss of about $1.8 billion. Ever-rising interest rates due to the aggressive policy of the central bank and rising inflation. But what is not being talked about is the role that venture capitalists played in the fall. The situation went from bad to worse due to their role. Venture capitalists' overreaction to SVB's need for raising capital sent panic across the industry. Now, these waves soon turned into a tsunami that could not be controlled. Right from Peter Thiel's Founders Fund, Koto Management, to the Union Square Ventures, all instructed their founders to move their money out of SVB after its call to raise capital. And all of this happened on Thursday. Now, the rest of the industry followed suit, which eventually led to the bank run within 48 hours. But these are people who will be called right, as SVB did eventually fail. Now, what will probably go neglected, however, is their role in SVB's drowning. Just days before the eventual demise, SVB ironically tweeted about being proud of making it to the Forbes list of America's best banks. We know how that played out. SVB is known to serve customers across the world. Startups funded by the American incubator Y Combinator are also affected. Most of these, which have Indian founders, are now struggling for working capital. A third of these startups would not even be able to pay their employees in the coming days. SVB is the default bank for most YC-backed startups. More than 60% of the Indian Y Combinator startups had more than $250,000 in SVB. Now, the biggest risk for the smaller or younger YC startups is that they will not have the multiple bank accounts. The Indian Union Minister will also be meeting with the Indian startups affected by the fallout. The Federal Reserve Board of the Governors has also called an emergency meeting on the 13th of March. According to officials, the board will review and determine the advance and discount rates that are to be charged by the Federal Reserve banks. But the scale of loss of the tech industry can only be measured in time. WION now available in your country. Download the app now. Get all the news on the move.